Yeah. So that's why I'm looking forward to having you on here, because also as business owners, there's the biggest challenge we have is keeping what we earn. And I don't mean
Absolutely.
just, from our own spending habits. I mean from the tax man and every other aspect out there, right? We're trying to create profit and keep profit. So
No
oftentimes
question.
we get these great gross revenues, but we have these terrible net profits.
Yeah. Yeah.
And welcome to the Sharpen the Spear podcast, where we help home service pros cut through the noise, sharpen their business tools, and reclaim the profit, freedom, and impact they've been missing. I'm your host, Richard Walsh, Profit Freedom Coach, and I'm here to help you stop grinding and start growing. Let's sharpen the spear. And we are back on STS Sharpen the Spear podcast with another incredible guest. I got Frank Bucholz with us today. And as always, Frank, no one knows Frank better than Frank. So, Frank, give us some backstory, bring us up to speed, and we'll tear into our conversation.
Well, Richard, thank you, first of all, for having me on. I appreciate it so much. Thank you so much. Bottom line is the fact that I was a financial advisor for 40 years. And when you coach people for 40 years on how to invest and watch the results, you tend to kind of learn a lot, if you will. And I've been through some great times, some tough times, but bottom line is I learned what worked. And I put that in my book, The Investor's Golden Playbook, of which I spent 3 years writing it to try to give people and readers every ounce of knowledge I could possibly bring to them. And I'm quite proud of my accomplishment.
It's awesome. My first question, why did it take you 3 years? Any particular reason to write the book?
Yeah, that's a good question. No, I think what I found is the fact that I would write something, then I'd go back to it a couple of days later and I'd rewrite it, and then I'd go back to it a week later and then I'd rewrite it again, and I'd also add some more knowledge, if you will. I bring all this knowledge to the forefront. It's hard to extrapolate 40 years of knowledge and working out of your brain and onto a piece of paper and make it interesting and make it readable. So it took me a while to get there. I didn't necessarily work 8 hours a day, to be blunt. I was retired, but nevertheless, I want to give readers every bit of knowledge I could possibly bring. And again, I'm quite happy with the accomplishment.
So, do you consider it semi-memoir?
To a degree, absolutely. No question, no question. Yeah, no question. I mean, it is. And I also want to do it as a gift back to society. My thinking was that Americans don't have a clue how to invest money, and I
Right.
felt that I could bring them something. And of course, I'm very grateful. I grew my IRA to $8.5 million, and my wife and I retired with no financial worries whatsoever. Got some health issues, but no financial worries. So I wanted to kind of give people a chance to kind of hop on board that train, if you will.
Yeah, that's great, because I find that stories in my book, when I wrote it, I wanted to really when you weave your story in with great knowledge, right, and actionable steps and everything else, is such a better read.
Absolutely.
You just don't want the dry do this A and the B, and then B jumps over to D.
Oh, no.
Yeah, no one wants to read that.
So many investment books are like college textbooks for doctors on digestive disorders,
Right.
pardon the expression. But I mean, I wanted to make my book interesting. I actually included real life experiences from my clients that I also experienced as well. And I try to put it in perspective, like here's what you should do. Here's what happened with this guy, what he's doing correctly, and here's what you should not do. So I have some gruesome stories in there, if you will. But I made it, I think, very readable, and it also is very memorable when people read about these examples of clients that did things right and clients that did things wrong.
Yeah, that's great. Good. I felt like it was going to be that way. I've not had an opportunity to read it yet, but I really love it. And I just want to encourage the audience, they can get this book, that it's not some dry bone stuff. It's going to be
definitely not dry bones. I want to make sure that, because the problem when I wrote the book the first time, it was dry bones. It was a college textbook, and I go, no, we got to rethink this. So I went back and rearranged everything and redid the whole thing. So maybe that's why it took me as long as it did. But it's not a college textbook, thank God.
Yeah, I wrote an ebook on build value, build profit. It was like 16 pages. And I have it. I'm like, okay, I'm looking at it. I'm going, man, it was good information. I'm like, there's no story, and there's nothing. No one's gonna read it. So I ended up being like 32 pages. I got done weaving the stories in there and everything else, more like some case studies and things like. And I'm like, okay, now it's a good ebook, and people love it. because
Yeah.
you can follow, you want to get to the next chapter, if you will. Right.
Absolutely. No question.
That's
Yeah.
the goal. So
No
that's
question.
awesome. I'm glad you did that because this topic in itself, I don't, most people are not passionate about it.
No, they're
I
not.
mean,
And of course, after family and health, money should be pretty darn important. You know what?
yeah, I did not have that as a priority for a very long time, especially first 20 years of my business. And then I was talking with someone yesterday about this. We were talking about just paying attention to your finances and the critical importance of this. Because I tell myself, listen, whatever you don't pay attention to tends to go away, like a spouse,
Absolutely.
your
Yeah.
friends, your
Yeah.
money. So I'm like, it's kind of high on the list. It's got to be high on the
That's
list.
very good. Yeah, that's a good observation. I like that.
Yeah, so that's why I'm looking forward to having you on here because also as business owners, there's the biggest challenge we have is keeping what we earn. And I don't mean
Absolutely.
just, from our own spending habits. I mean from the tax man and every other aspect out there, right? We're trying to create profit and keep profit. So
No
oftentimes
question.
we get these great gross revenues, but we have these terrible net profits.
Yeah. Yeah.
And it's so common that I see all the time working with these business owners that our whole goal is to increase their real net profit. How do we keep
Yeah.
that? There's a ton of ways to do that, but I want to talk to you about this stuff too because you've got 40 years of doing this stuff for people and everything else, and I know you're able to kind of break it down simply too for people. So let's just kind of begin, okay? And if you don't mind, we'll kind of hang in that business realm for my
Sure.
business owners out there. We'll kind of talk that vein, but in the beginning, because I know a lot of things they need to start small. People just don't do these huge things, right? So kind of do you have a kind of a high view process step by step? I don't need every step, but you know what I'm saying? Like what's the let's call it the method. So here I am, I'm in the fourth year of my business, starting to make some real money. I've got six figures sitting around, stuff like that, or maybe I don't even have that much, but I understand the value of investment, or I'm beginning
Sure.
to. And I think the earlier the better, but I'm thinking, hey, I got to put in six figures to invest, or where can I begin with something like this?
Yeah, sure. So the very first thing I think of what I would do, or what I would suggest, of course, is to make sure you're familiar with all the various retirement accounts that are available today. And of course, that includes, IRA, basic contribution IRA from way back when. And it also includes a Roth IRA, which of course grows your money on a tax-free basis and tax-free when you withdraw. And then of course there's also some business type of retirement plans as well. You know, so there's a number of retirement plans that are available to you, and I highlight these in my book. And quite candidly, I've kind of forgotten some of the limitations on them, but you can put away a fair amount of money in these plans, and the money does grow for you, tax deferred in all of them at least, and in your Roth IRA, if you do that as well, that of course that's tax free when taken out. So that's a great way to start. And the sooner you do it, the better off you are because the money will compound over time.
Yeah, I think that's a big takeaway I've learned over time. My kids who are young, late teens, right, early 20, they've got a hold of this concept and
Yeah,
they invest. Not huge $25 here, $50 there. They're putting the stuff away. I was sharing with another gentleman on one of the podcasts. I have a friend, his son who's 17 now. I think he just turned 17, working part-time job, at the fast food place, but he's fully funded his Roth IRA,
absolutely.
for the year. Like
Smart, very
it's
smart.
just like, man, kid, you are going to be set starting in my
Yeah,
kids too. I'm
yeah.
like, this early, this is what it's all about. And I know a lot of business owners, they could be in their 20s, they could be 30s, 40s, whatever. But to me, there's like no time like the present. Every day
That's
you
correct.
waste is a day lost in compounding.
Yeah, yeah. And of course, the other thing, of course, is I realized when we were managing 401ks, is a number of people put those retirement monies into money market funds. And if you're a 30-year-old and you're putting your money in a money market fund, you're shooting yourself in the foot. You got to have some courage and have some drive because the best returns of any investment over the last 50 years has been in the stock market. So you got to kind of take the bull by the horns and invest in the stock market because that'll give you the best opportunity to grow those funds. Is there a guarantee? No, but history does have a way of repeating itself. And that's where I put all my money in my IRA over the years in my 401k. Like I said, today I checked it. It's almost $9 million, and I've taken $300,000 out this year so far. So the money does grow over time, and also don't run for the door when you have these kind of like we had in April with some downturns. Hang in
Mhm.
there because the market always moves to higher highs. Always, it always has. So have some courage and stick with it.
Yeah, it's that emotional investing or de-investing.
Yes,
More
absolutely.
people do. I mean, it's just that's really how you lose.
Yeah, absolutely. No
You
question.
know,
Yeah, no question.
it,
No question. You
yeah,
run
it
for the
takes a little
door,
courage
out.
to stay in there. Yeah,
Yeah.
yeah, and I think you may talk about this in your book too, but I think you gave a great example. Over 50 years or even longer, you see the trends. Things are up and down. They come, but you got to look at it over a long span because
Yes.
it's an investment. It's not you know a short term thing.
That's
Right. So we,
exactly
we have to
correct.
understand what we put away. And again, that's bringing us back to the reason why you start early as well. And it kind of bums me out, Frank. I call myself a victim of the public school system. Okay. So as I
Yeah.
went through, like, they didn't teach it, and I'm not young. So it's not they didn't just stop teaching it. They've never
Yeah.
taught it.
Yeah.
They've
Yeah.
never taught it. Okay. I mean, the most they did for us is show us how to write a check.
Yeah. That's
Okay.
about it. Yeah. Isn't that sad?
It's
Imagine,
horrible.
we had classes on health, but never a class on money.
Right. Yeah.
It's incredible.
I had the fortune to be able to homeschool all my kids all the way through, so they're dialed in. Okay, they learn stuff that matters. Okay, so
Good.
things like that, and that's why they're doing all the stuff they're doing now, and they really get it. It's really great. It was again a great opportunity for me to demonstrate to them. And I remember these little exercises we used to do as they were growing up. I started really young. Here's my best one, I think. Big snowstorm. We're in Wisconsin. Got this huge drift out front. Kids are out making snow caves. Okay. So they're digging them
Right.
up. My one son, Augie, he's on like his fourth one. He's like four and he's curled up inside of it. And I got this video camera. This is how long ago? It was maybe 15 years ago. And I'm videotaping. I go, hey, Augie, what do you got? I go, you're building snow caves. He goes, yeah, my little snow house. I go, yeah, it's pretty cool. You got four of them now, but you can only be in one at a time. What you to do with the other ones? And he goes, I go, maybe rent them. He goes, oh yeah, that's a good idea, Dad. Could rent those out. I go, there you go. And you know
Income,
what?
baby, income. There you
And I
go.
told him, and you know what? Guess who's in real estate right now at 19 years old? He
Wow.
is, right? Doing it, wants to be
Wow.
financially free by 24. And those are just one of the many lessons, but it's a memorable one.
Yeah.
I
Yeah.
just saying it because that's how I'm thinking. I'm like, dude, look, you're a real estate mogul already in
Yeah.
snow caves.
No question.
So it's little things people can do with their kids too. It's like that's another thing about when you're not literate. I don't mean that in a derogatory way. I just mean that you're not financially literate, which most people aren't. You can't share with your kids. How do you teach it? How
Yeah,
do you
exactly. Yeah.
demonstrate
No
it even
question.
in
Yeah,
your
no
own life?
question.
Yeah.
Yeah.
I mean, some people work for companies and they've got whatever, a 401k or this or that. But when you're a business owner, it's a whole
Whole
different
different animal. Yeah.
because you have access to this money. And that can be a problem.
Yep. No
Because
question. No question.
you don't have a plan for it. You just have
Yeah.
lots of it. I am a living example, Frank, of 20 years of having big piles of it and watch it evaporate, watch it
Yeah.
go away
Yeah.
because I didn't
A lot of
know.
temptation out there.
Yeah, and it for me when I look back now and I've fucked so many people and learned so much stuff and I'm just like literally didn't know. I'm like,
Yeah.
I don't, and when you don't know, you also have fear of doing that different thing. Taking this, what do I know about investing? I want to just, throw darts. I don't know, So that I think gives people hesitation as well.
Yeah. Yeah. No question. No question. And in my book, I try to highlight the fact that a number of people, if they want to invest in the stock market, they need to learn how to invest in the stock market, but not necessarily how to buy stock. They need to learn how to invest. And that's why I suggest strongly, of course, the managed accounts and exchange traded funds and even mutual funds to a degree. So there are ways to invest in the stock market. It doesn't involve the average individual just going and buying a handful of different stocks. That's kind of like shooting yourself in the foot as I see, because you're competing against the professionals out there. And I think most people don't know how to do that. So that's been my
Right.
experience
Right.
anyway, for sure.
Yeah, there was this big swing the last, I guess, probably 20 years, right? When you got uh, these investment apps, if you will, right? These
Oh yeah,
things,
Robinhood.
what was
Yep,
it?
yep.
Yeah, the Ameritrade or whatever, all these, even before then, right? You had this, what was it? I can't remember the name, but and you kind of, the day traders, they're
Oh
jumping in
yeah,
this stuff and they're trying to make this money, and not a lot of them succeeded.
that's right.
Because there was, again, they kind of didn't know, but at the same time, I don't know. I don't know the ins and outs of it. You see stuff come and go, and today it's a little more sophisticated. They've got better technology and applications, AI and all that stuff. But again, those guys, at least they were trying.
Absolutely, no question. Yeah, at least they're trying. At least they're taking some initiative.
Yeah.
Most people don't take the initiative.
Yeah. One thing I know I did a mistake, and here's what you hear a lot from business owners too. I am investing in myself, in my business. I'm investing in my business. And I'm like, and I'm just as guilty as them. Okay. I'm buying stuff. I'm building this. This is my, oh man, you got to straighten people out on that, Frank, because there's,
Been there, been
yeah,
there.
yeah. So just like set us all straight. Okay. Just let
Yeah,
these people
no
know why
question.
that's not the best thing to do.
Yeah, no question. I'm telling you, been there, been there, been there, done that.
Yeah. So like, kind of give like, because people think, and I get it, right? We want to build a business. We think we're going to sell it. And I've been through many of these discussions. We train it. Most people aren't building the business to sell anyways. When they get to that exit point and they have this really rude awakening that what they've built is worth next to nothing. Okay, because it doesn't run itself. You have to be there. You got a bunch of depreciating assets, vehicles, tools, and no one's gonna. They're gonna give you 15 cents on the dollar. You think you're gonna walk away with millions, and you're getting here's 80 grand, for your
Yeah,
business. So
yeah,
it's sad, but there's a way to fix that and fix it in a shorter order too. I mean, not just obviously from the business end, you can change how you do your business. We help with that, but that's why the investing thing is so important to have it outside of your business. Wouldn't you agree?
absolutely. Segregate the assets for sure. No question.
Yeah.
No question.
Yeah. So in that aspect, because we talk about the stock market, you've got that. I mean, there's a gazillion ways to invest. Okay, so kind of give us the insight here on how to choose your vehicle. Is there a method to choose, like, oh, I want to do a real estate. I want to do Bitcoin. I want to do the stock market. I want to do 401 individual 401ks or whatever it is. What's your insight? What's your thought process on that? Does it kind of match up with the people, or just again, I'm just looking for a high view. Like, what's been your experience in that kind of stuff?
So bottom line, of course, is when we talk to a new prospect, if you will, we always had to profile the prospect, which meant that we had to ask that particular person questions. And a lot of times it came down to their time horizon. How long do you want to invest the money for? How about liquidity needs? In other words, do you need the money in 6 months, 2 years, 10 years, what have you? And of course, your risk tolerance. Can you stomach some risk? Do you want straight line investments, which means they go up over time on a straight line basis, maybe not very rapidly, but straight line basis. Then of course also your tax bracket. In other words, are you in a high tax bracket, for example? So that really kind of was set in motion where we would suggest that that person invests. If they're willing to take some risk, they have a 10-year horizon, then of course, and they don't need the money, for anything real soon, if you will. Then of course that would lead them towards the stock market. If they need the money in 6 months for taxes, we would suggest a treasury security because if the government doesn't pay you when your money's due, it's a problem. So we would have something that's very, very safe and secure for tax purposes. And then, of course, in terms of other investments, be they real estate or Bitcoin or what have you, we had enough experience in those areas. Typically, not so much Bitcoin, but particularly even real estate. Real estate, of course, requires the three T's: time, temperament, and talent. So if you're going to go out and buy real estate, that's a whole another animal. That's what we call an active investment versus stocks, which are passive. I can put money into a professionally managed stock account and I can sit back and have the managers do it. Whereby if you're going to buy an apartment building, you got to manage the darn thing. And that could create a lot of, anxiety, if you will. So there's a grandiose difference between buying an apartment building and having a managed account in stocks. So I was never one to get involved with real estate except for my own personal house because of that. And I also did really, really well by investing in stocks over the many years I was involved in the investment arena. So, you know, it worked out really well for me, and I don't see a reason why it wouldn't work out for most people as well. And you know that average return of 10% in the stock market goes back through thick and thin. And most years are better than 10%. And then of course you do have 1 year in 4 that goes negative. Particularly last year we had that was 2022. So most years are in fact positive. Thank goodness.
Yeah. Yeah. I think what people don't get, like when you're talking about the real estate, is you have to pay attention to it.
Oh, absolutely.
Like and like, again, if you buy a single family residence, now you're the plumber,
Yes.
you're the roofer, you're all this stuff, right? So it's something you have to know. But again, also you're talking apartment complex, you could have property management companies, but you're going to pay a percentage, right? And
Absolutely.
take that,
Yep.
but they'll do it. So there's a lot of different ways to do it. But I've also found and learned over time is you really have to have a desire for that kind of investment.
Yes.
Meaning like you're going to pay attention to it. You're interested in it.
That's one of your hobbies almost. Yeah.
That's right. You got to keep your eye on it. And man, like I said, I just struggled with that stuff for so long. You know, I wasn't interested in money. Really weird, but I was building great things and creating all this stuff. And I made a lot of money, but I didn't care about the money. You know,
Right.
so which means I was not planning for the future.
Right.
I was planning for my next project. Okay. That's all I was doing. So
You're not alone. You're not alone, Richard.
yeah, I was a stinking train wreck. Okay. I mean, ask my wife. You know what I mean? Like I did some stupid stuff. My favorite thing to say is if I only had the money I lost, I'd
Yeah,
be
of
set.
course. Yeah, of course.
You know, so we kind of all been there, and I'm just kind of painting the picture. I really want to kind of drive the emphasis on the need for this.
Right.
Right? Mine's all cautionary tale. Okay, that's my experience is all that, right? So I just want people to be able to avoid that, to know that there's this method, right? This vehicle, if you will, right? To be able to take it, and how do they get it? And I'm thinking one thing is your book, you know, like start to get the knowledge, but then it's kind of the practical application of the knowledge. You know, books are great and they got good stuff in there, but you got to kind of take action, right?
Initiative, initiative. And, in one of my last chapters, I talk about, start the Starbucks, coffee situation,
Mhm.
whereby you take the money you buy, spending on Starbucks every day, and you take that money and now you buy the exchange traded fund that trades under the ticker symbol SPY, which is the Standard and Poor's 500 index. And of course, you get when you buy that, you basically are investing in 500 stocks. So if you did that over the last 35 years, starting with $5,000 and doing just $10 a day, you'd have over $1 million right now. And your investment probably was about 120 grand. So, there are ways to skin this cat, if you will, but you got to take the initiative. And that's a fairly simple, very basic way to grow your money. Very simplistic.
Yeah. Or, it's a funny thing. So speaking of Starbucks, their little app, you probably already know this, but I'll share it with them. So you put your money on the app and you go up and they scan it every time you get a coffee every day or whatever. I found out like at any given time, they have $1 billion on that app. Okay.
Wow.
And they use
Wow.
that to do all their building, to
Yeah.
all their investing. That's there it is, right? They can use that for getting loans and backing the loans. And it's other people's money. 1
Oh,
billion at any point, 1 billion on
wow.
those
I did not
apps.
know that. That's
Yeah.
interesting.
So when you're putting money on apps for stuff, thinking, boy, I'm just jealous. I didn't think of something like that. Because man,
Wow, that's amazing. Huh.
you can put $40 on your app and it'll take you 2-3 weeks, 5 weeks.
Yeah,
Could
yeah,
be,
yeah,
it just sits there. You just
yeah.
here, hold on to my money. It's kind of like what the government does every year or every paycheck. Here,
Absolutely.
I'll
Yeah, for
hold on to
sure.
that for you, and I'll give some of it back in a year.
Yeah,
While we do what we do with it. So, but yeah, it's pretty fascinating when
that's
you think
interesting.
of
I didn't.
this.
I'll have to read. That's very interesting. I'll have to check that out. Yeah, that's fascinating.
Yeah, man, you talk about leveraging your cash. Holy cow.
Wow.
So yeah.
That's crazy. I'm telling
So
you.
people are sharp. These
Oh
companies,
yeah,
they think it's some
these
pretty
people aren't dumb.
convenience. People they don't realize even what they're paying for that convenience is doing for others.
Yeah. Yeah.
So pretty neat. So let's go back to kind of like we want to get into this investment thing. Again, I got a little bit of money. Maybe I don't have a lot of money. I just know it's important. Like you just said, $10 a day, or maybe it's $100 a month, or whatever it's going to be. And they begin this, and again, that early thing. So the compounding part in early on in my life, like I had no concept of compounding, and I know I forget his name, but eighth wonder of the world, compounding interest. I think it was Einstein. Didn't Einstein say that? He
I
says
think
the
you
eighth
did.
wonder of the
I think you
world
did. Yeah.
is this compounding interest. So, like, if Einstein thinks this, I'm like, maybe we should get a piece of this action. You know what
Yeah.
I mean? But just kind of explaining what that is, because I think a lot of people don't get it. Because I think what is it if you start at 40 and you put in whatever 100 grand, or you start at 20 and by 60 when you both want to exit, you've put in the same amount of money, you've got like double or triple the return, right?
Yeah. Yeah.
Because of the compounding effect. So that's something I think a lot of people don't grasp either, Frank.
Yeah, of course, absolutely, no question. So for example, today if you start with $100,000 and you earn 10% of that money, then of course you're now at $110,000 in a year. If you earn that same 10% again, now you're at $10,000 plus $1,000 you made on the 10,000. So now you're at
Right.
$121,000. And then you can extrapolate that on out, of course. And over time, you can see how it really grows because you're now earning on what your growth was in your portfolio. And I always look at a rule of 72. Rule of 72 is, of course, is the number of years, and it's a formulation whereby, let's say, for example, you want to know how let's say you earn 10% a year, well, your money will double in 7.2 years. So you basically use that as a method to calculate how fast your money is going to double, if you will. So it's basically the interest rate over the number of years, and it proves very, 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 very favorable for you to see how your money's going to grow. But compounding is so important, and it's really makes a big difference because in my own case, I can see whereby I've accumulated enough money by now, so even if I get 5%, it's a pretty significant amount of money that goes in my account every year. So it's a very, very worthwhile concept, and understanding is very important.
Yeah, that's great. I use the old, if you have an option, I can give you $100,000 now, or I can give you a penny and we're going to double the penny every day for 30 days.
Oh yeah, for sure.
Which would you like? And
Yeah,
people would
yeah,
say the 100 gram. Like, that's over $5 million
yeah,
in 30 days, doubling that thing.
yeah,
My wife said, it is not. I go, it is. And I'm no
yeah.
math genius. Okay. So I
Yeah,
literally had to walk her through it. Not throwing her under the bus or anything, but I go, let's do it. I'll just do it. I just did it on the calculator. And she's
yeah,
like, oh, I go, see, what do you think? I'm making this stuff up? I'm the
yeah.
last person to make up anything about numbers. Okay. I have verified and double verified this stuff. So, again, that's the simplest way to demonstrate compounding interest, is
Absolutely.
like that.
Yeah,
It's like,
yeah.
if people think $1 million, no, man, it's $5 million. It's over $5
Crazy,
million.
isn't it?
Yeah, it's
Yeah,
really so.
yeah,
My a challenge for me and a lot of people, Frank, I think, is how do you actually make this enjoyable? You know what I mean? Like, I don't mean like let's gamify it in some way, which people like to do that. I'm not that guy, but like I'm always trying to find a little way to like, how do you like enjoy this?
yeah.
Do you know what I mean?
That's a very, very good question. I think bottom line, of course, is in my case, of course, I was in the thick of it, but when I retired, which is in 2021, I can look back now and I can look at things, and I can look at things a little differently. And I can see where some of these portfolio managers, where they're investing. And as an example, when I did my IRA rollover, I put 30% in what they call large cap growth and 70% in large cap value. And it probably should have been a flip flop, but I was trying to be a little more conservative. But I can still look at it and look at NVIDIA, for example. And last time I looked at NVIDIA, I'm up almost 700% on that. So, that's fun because I can look at that and go, would you look at that particular stock? That's incredible. And the irony, of course, was the fact that when I was working, I really wasn't watching the video per se, but of course, look what's happened since then. It's become the largest company in the world at this point, market cap over $4 trillion. So that's where I kind of find it fun. And also the fact is that if you're in the market and you have a professional management team running your portfolio for you, and you see it growing all the time, or most of the time, there's fun in that as well. Now you got to be forewarned though that you're going to have some downturns. When in April, for example, we had the what I call the tariff tantrum, and of course my portfolios were down, or my accounts were probably down about $3-4 million, and I actually 3 million. I've got that back since then. I'm up $4 million since April. But that of course I can see that today because things have improved immeasurably. But that's the fun part. The pain part, of course, is when you see things kind of going negative. That's kind of like, but you got to hang in there because things they've always come back and they've come back again.
Yeah, it was like late 90s with the tech bubble with the little
Yep.
oh,
painful.
I had these guys showing on paper. They were like, dude, I'm set. 65 million. I got this, and it evaporated. The stuff just went away. It was like because they were valuing these companies on nothing.
Absolutely, yeah.
Though these websites. I mean, I forget the name of the company, Frank, but they dropped 170 million buying this internet company, and it was like less than a year later, it was worth zero.
Oh yeah.
I mean that is painful.
Yeah, I talk about in that book. Anything with .com in it was worth $1 gazillion back in those days, right?
Yeah, God bless the guys who sold it and got it.
Yeah, I thought, oh my God, are you kidding me right now? Oh my God.
I was in the steam room at the club, okay, and I'm talking to a buddy of mine who's he's a stockbroker, right, doing all this stuff, and he's like, we're talking about this whole .com thing. He's like, listen, like I average 20% for my clients on a regular basis. You know what they want? 50%, 100%. They want this. This is not real. He goes, I can't offer this stuff, So we're having this conversation, and another buddy of mine says, well, I got 200% and blah blah. They all lost all that stuff. He didn't. He would, but his clients were a little angry with him. He's like, you don't want to put your money there. It's not based on any value. There's no real value. It's based on, So he had to struggle. I remember him struggling during that time with his clients. He was a lot of pressure on him, but he just held his ground. And man, were they thankful.
Yeah.
Okay, because they could have lost a ton of money. So it's fascinating.
Those crazy days, I'm telling you, crazy days back in those days. Oh my God.
Yeah, it was. I'm just like, I already don't know anything. And I'm hearing this, I'm going, I think I'm going to stay in the dark. Okay. I'm not going to invest in that either. I have no idea what this stuff is, So I was but I'm watching, I was around a lot of big hitters and stuff, and I'm just watching their conversations, listening, and I'm like, wow, this is nuts. What's going on. So a lot of people weren't even like around then, but that was a wild time.
Yeah, but boy, number one rule of investing: diversify. I'm telling you. If you had all the money in tech back then, you were oh my God, you had your lunch handed to you.
Yeah, it was something else. So again, we always, we got to season the good with the bad.
That's right. That's right.
You got to realize you can always do something stupid. Okay, it's never off the table. There's always opportunity for stupidity. I can assure you.
No question. I'm telling you, no question.
Yeah, that's amazing. So, tell us a little bit more about the book. Let's kind of get into, break it down, if you will, if you want to hit, talk about different chapters and kind of the breadth of what you're covering.
Yeah. So basically what I did is I came up with a, the book. I don't know if you can see on the screen here or not. Yep. It doesn't show very well. Sorry about that. Anyway, it's called The Investor's Golden Playbook: 12 Rules for Achieving Real Wealth. And I kind of lay it out in terms of a chapter by chapter, in terms of what I think are really important attributes in terms of learning about investing. The first one, of course, is develop a proper mindset. And I talk about one of my favorite clients back in the day. His name was Leo Arena, and what he did that made him money. And he was a dentist, but he made the bulk of his money by investing in the stock market. So, and he would always call me when the market was down and buy more. And he was a great teacher for me, because I learned a lot from my clients, and he'd be one I learned the most from of all my clientele I worked with over the years. And even the second chapter, for example, is pay yourself first. we talked about this earlier with retirement accounts. Pay yourself first. That's vitally important. Have that money come out pre-tax if you can. Have it on autopilot where it comes, automatically funds and goes into various, stock accounts, if you will. I think that's extremely important. And then, of course, have, another 10 chapters talking about various, subjects in terms of investing money. So, and I lay it out in such a way that it's an easy read.
That's great. I think, the pay yourself first is a big topic of discussion in the small business arena because
Yep,
most people are not doing that.
that's right.
I didn't do it for a long time. It's like you might get a lot of money, but you don't get it consistently,
Yeah, that's correct. Yeah, that's
and
correct.
you don't really have a strategy and you're the one taking all the risk. Okay. Yeah. Okay. You're supporting families. You got all these employees and whatever, but like, why are you the low man on the totem pole when it comes
Yeah,
to getting
yeah,
paid? Because I can tell you,
yeah,
if
no
I shorted
question.
my guys $30 on their check, I was hearing about it. Okay. Like I left off 30 minutes off the time card. Like they knew. Okay. I mean, I'm like, you know what? I think you guys are sharper than I am.
Of course, yeah, of course, yeah, yeah, no question.
Because they're time for dollars.
Yeah,
They
yeah,
get it. They understand that, what's missing. And I don't think we do sometimes. And we don't get
yeah,
the importance of that discipline. Again, you pay yourself first. So I want to break this down too with you. So when you say pay yourself first, it doesn't mean you get just a paycheck. What I think what you're saying is your money has a place to go. Okay, when you
absolutely.
get it, but you need to get the money for it to go somewhere. And if you're
That's
not
correct.
paying yourself, we just talked about compounded interest starting early. Every week you're not putting money in, you're losing money,
That's correct.
right? You're
That's
losing the
absolutely correct.
potential to
Yep.
grow your money. So this I want people to grab because like this is just another reason why you want to pay yourself first, so you can take that portion, 5%, 10%, 3%, and put it in an investment portfolio. Right.
That's
So
correct.
let's get that
Yep.
stuff somewhere. So if you needed another reason to pay yourself first, okay, this is one of those reasons, right? Because
Yep.
those
And have it
little,
on autopilot too.
that's it. That's what I mean. It comes out, you never see it, right? It
Exactly
comes
right.
out automatically. I
Yep.
remember telling my kids we were at the dining room table. We homeschool our kids, so dining room table is the classroom. So I was sitting there, we had some dollars, and my kids were, they got a little bit of money. They did something, and got $10, and the in-laws will pay them in singles, so it looks like they got a lot, and stuff like that. So look at this, Dad. I go, well, that's great. Look at those. I go, well, what are those? And I go, well, they're dollars. And I go, okay, well, remember when Dad had his whole business and he had all his employees? I go, yeah. I go, I was making a lot of money, right? And they're like, yeah, yeah, okay. And I go, so you have to consider every dollar a worker. And the more workers you have, the more money you can make. Okay. I'm like, oh. And I go, so just remember that. That's why you just don't want to get rid of them. Because if
Yeah.
you get rid of your workers, you can't do work, you can't get paid, you can't earn money. So like that was my little I'm like, I'm trying to teach them how to save. I go, they weren't investing at 5 years old, 7 years old, but I'm like, let's get into this, like understand what this is. Don't treat it as a piece of paper or just money. This
Yeah.
is leverage, it's investment, it's the ability to do things. So
Yeah.
yeah,
Yeah.
again, like when you start thinking this way, you start seeing the applications for this kind of stuff. And I think one of the big things, who was that? It was Kiyosaki, right? Who did I don't think he called it cash flow. He's got like a monopoly game he built on investing. Do you ever see that? I
No,
forgot.
I've seen his book. I've
I
seen the
forgot what
names
it's.
1,000 times.
Yeah, well, he built this really cool board game,
Okay.
and it's like, and you learn to invest. It's like playing Monopoly, but like it's different than Monopoly because you're, whatever. But it was kind of fascinating. So there's all these great tools. There's more and more now to teach younger people like the power of investing
Right.
and
Right.
saving, and creating that in their mind, even if it's the Profit First book, Mike Michalowicz, who's like envelopes. You got 5 envelopes, literally, like grandma used to do. Rent goes in this one, utilities goes in this one, and investment and groceries go in this one. You start doing that kind of stuff. It's real rudimentary, but it's like, well, when you're 5, that's a pretty good system.
No question. Yeah. No
And they
question.
start to save for this and do that. So there's just so much power in it, Frank. I don't have like regrets, but the myself just ignoring it for so long. It's like I've really had to, like, I don't want my kids to ignore that,
Right, right.
the power of what this is. And if more young people understood this, they because I think one of the downsides on the young, Frank, is like I was thinking about, I went to the Marine Corps at 17 years old. Okay. And I like the 4-year contract, which when you're 17 is a lifetime.
Yes,
Okay. 4 years is like you're going to prison for life. Okay. So I'm like, at 17, you have no concept of time. So
that's
to
right.
understand investing and what it's going to look like in 20 years, 30 years, it's almost incomprehensible in a young person's mind. Do you know what I mean? So there's
That's
kind of
right.
an uphill battle right there. So that's why I started like, well, how can I make this kind of like understandable?
Yeah,
You know,
yeah,
because man, I just watch them already, like what they do with their mind. I'm like, this is worked out. It's not perfect, but again, for us, no one was telling us about this when we were
exactly
8,
right. Yeah,
10. So,
yeah.
um, I don't know why I'm sharing this. It just seems like I just want to encourage people. Like, not only do you have to educate yourself, but it's really do your children justice.
Absolutely.
Because you'll hear these stats, Frank, like, well, this is the first generation that's not going to do better than their parents.
Yeah, yeah.
And I'm like, well, if you tell them they're not, guess what they're going to do? They're not going to do it. Okay. Show them these vehicles. Show them just what we've talked about today. If they can get into that with their first job at 15 or 16 years old, and that becomes the lifetime habit, they will blow us away.
Absolutely.
It
No
will
question.
smoke us. But
Yeah, yeah,
you get the gloom and doom, like, oh, you're doomed. You're never gonna be like, no, there's so many vehicles to make money. That's why I love business. It's an
yeah,
economic
yeah,
engine. The thing
yeah,
is an economic engine, man. I can rev it up, I can add horsepower to it, I can idle it back, I can do whatever. But then again, taking that and then compounding that again from there. So
yeah.
yeah,
And of
very
course,
cool.
there's about 70 million people today that have 401ks. And of course, of those 70 million people, I'm convinced about 69 million people don't have a clue how to invest those funds. So what happened with the advent of the 401k is that it made so many more people investors, whether they wanted to be or not. So of course, if you put, like I say, if you put those funds in a money market account, you're shooting yourself in the foot big time.
Right.
Yeah, it's a straight line and there's no risk there, blah blah blah. But you have risk of inflation being greater than your
Right.
return. So that to me is that you're losing money no matter what you do, because
Yeah.
typically the rate of inflation will be higher than the money market rates are.
Yeah. And if you haven't experienced inflation yet, you've been asleep.
Yeah,
Okay.
no
I
kidding.
mean,
Oh
man,
my God.
you know
Oh,
what? Here, so again, I'm a simple guy. So here's how I describe inflation to people. The store, the Dollar Tree, everything's a
oh
dollar. You're
sure.
going, okay, they're all over the place. Been decades. It's been a dollar. It's $1.25 now.
Yeah, of course.
So
Yeah,
I tell them, I go, it's 25% inflation. I don't care what the government says. 5, 7, 10. They lie about everything. They change the consumer price index, everything else. They do all that nonsense. You go to the Dollar Tree, and if after decades they've had it raised 25 cents, that's inflation. Okay, so
that's right.
and they're going to raise it again. So
Yeah,
like it's
yeah,
not done. Like so, I break it down simple like that. I'm like, dang, I got $1.25. Well, that's
yeah.
plus the tax. You know what I mean? So I'm
No
like,
question.
you can see it. It's there, and you learn devaluation of currency and all this other crazy rabbit holes we're not going to go down. But it's just like you have to like put things in those kind of terms. You have to understand what it's at and how does that affect your investments.
Yeah, yeah, no
Like you
question.
said, that's a major. How do you inflation proof that? Right?
Yeah,
Like you're saying, you put it in the wrong thing, it gets gobbled up between fees and inflation. Like you're done. You made
yeah. Of
nothing.
course, the only way to really beat inflation is to invest in the stock market. That's really the only way. Because even if you have a bond portfolio, of course, the value of the bond portfolio is going to fluctuate inversely with interest rate changes. So you could have a bond portfolio for 5 years and actually lose money on it. So, it could happen with the stock market as well. But yet, the odds are history repeating itself. And of course, I think you typically do a lot better with the stock market than you would with pretty much anything else in a retirement account.
Right. Yeah, that's great. That is awesome. So yeah, it's been wow. This has been a very interesting conversation. I'm trying to, whenever I'm talking money with someone investing and everything else, so I bring on experts because I am not one in any shape, right? So I'm always just trying to kind of assimilate this information, and same thing for my audience, so they can hear it. And it's encouraging. Guys like you who are taking all this experience, 40 years of experience, and then put it in this book in some simple, understand terms to really educate people to begin this process or continue
Absolutely.
if they're now or readjust if you're now. You could be sitting there listening to this today and go, I've got that. I got that straight line. I got to change.
Yeah.
And then they might actually start looking and go, dang, I haven't made any money.
Yeah.
Been in there for 7 years. I made any money.
Oh my God.
Yeah.
So
it's this is super valuable, so I just love it. So the book, where can they get the book?
the book's available on Amazon, of course. It's on Barnes and Noble, Apple, etc. So there's a number of websites it's available on. And if people like to look at the reviews on Amazon so far, we have not sold a ton of books, but we're surely giving it our college effort. So it's been very, very well received. And the comment I get more often than not is, I wish I had this book when I was younger.
Yeah.
And the other comment I get, of course, I'm giving this book to my kids for them to read and understand as well. So, I've had a lot of good positive feedback on the book. And again, I think that it is very, very worthwhile for Americans in general. And I'm also going to donate all the profits I make on the book to charity. So it's a double give back. So
that's great. I always remind people when you're an author, I always tell them I'm a best-selling author. There's a couple books. I'm like, you don't write these books to make money.
No, my God,
okay.
No way.
You're going to live a life of disappointment if you do that.
Oh my God.
This is strictly to get in the hands of the people that it's going to help. Right.
Absolutely.
And if that's 500 or 50 or 500,000, like
whatever
you're helping
it is,
those people. Right. And then we use that too as authority, and we got this, and I can build other stuff, and people get introduced to you, and you want to coach people, and maybe you're going to help them with that, and they build it. So I always want to throw that caveat in there, and because everyone goes, oh, you're a best-selling author, you must be, I must be the same person, but it's helped me with my business. I'm not a $1 million bookseller, but I have an incredible book like you, and it's helping people. It's getting their business.
People. So I call it a double give back to society,
Yeah, I love it. I love it. I love it. So great. So Frank, any parting thoughts for the audience?
I think the parting thoughts, of course, is take the initiative, have some courage, stick with it. Don't abandon don't run for the door. Try to maximize your contributions to retirement plans if you possibly can, and look at things in the long run, not for today. Remember, and when it comes to investing in the stock market, it's time in the market, not timing the market. So stick with it. If you looked at the crystal ball back in 2020, January 1st, 2020, and saw what was going to happen across the globe, you would have run for the door. The markets closed up that year. So you got to hang in there. Stick with it.
Yeah, very, very, very great, very good advice. Great advice, Frank. So thank you so much. Is there any other way you got a website and like that people want to connect? Yeah. So this has been great. I appreciate all the time. And for everybody else, we'll see you on the next STS podcast. Thanks for tuning in to Sharpen the Spear podcast. If today's episode helped you think sharper, act smarter, or see new profit potential, do me a favor. Share it with a fellow home service owner and leave a quick review. Ready to find the profit hiding in your business? Head to sharpenthespearcoaching.com and book your free profit discovery call today. And until next time, keep sharpening.